All right, everyone, here we are with ticker symbol SOS Limited. And before we jump into this chart, I want to say welcome to all the first-time viewers and investors. Welcome to the channel, Invest for Tomorrow. To all the subscribers, welcome back. And as we dive into this chart, I do want every single investor and viewer to be aware that I have information about the S&P 500 index and also 10-year treasury bonds and so forth on how they both correlate and what's going on and why the market is down and the tweet of the day. So stay tuned for more information on that. So SOS has been running, right? Started to run yesterday and we've been seeing it run actually since Monday, since the beginning of the week, recovering from those lows here from last week of 421, ran up to 730, pulled right back down, hit a newer high here of 851, pulled right back down and ran up again. So what is going to be important moving forward here to look at? So while the market has been very rocky, this has been very bullish. So let's zoom on in and see what's going on here. So 50-day moving average here is 751. Anything below that is bearish. If that gets broken through, your next support would be down here at 658. You definitely want to keep that in mind and pay close attention to that. But our first support level before worrying about anything in bearish territory is 763. It's currently sitting at 793. 763 is super important to watch how it reacts between that point and the 50-day moving average to see if the bulls try to reappear and bring it back up, or are the bears going to continue to tear this one down. Super important to watch and pay close attention to. Now, our resistance level is a little bit more narrow, but first we talk about the top point so we're aware of the highest point that the bulls reached before we talk about our resistance. So this is the highest point reached in the day and in the week, and that's 924. So that is the next resistance. Once we break through tomorrow's resistance level, that's going to be a very important resistance level moving forward for the next coming days and weeks. Now, our resistance level is here at this point, and that's 858. That needs to be broken through by the bulls to continue this momentum, pull further away from the 50-day moving average, and reach newer highs and new resistance levels. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button to let me know you watched this video. Stay tuned to the very end because I have so much information to share with you guys about the S&P 500 index, the tweet of the day, and 10-year treasury. Stay tuned. So for everyone that has made it to this point in the video, I'm going to talk about the S&P 500 index and why the market is down and why it continues to pull down and struggle to stay up, okay? I want us to be aware of this, and it has a lot to do with the 10-year treasury. So let's jump into the tweet of the day, and we're going to jump back into the S&P 500 index and also 10-year treasury. I usually talk about individual stocks to add to your watch list, but right now I believe there's so much more value in being aware of this than an individual stock. Now, if you want to know live updates on 10 plus ticker symbols that I've already shared with everyone in the last 2 weeks, and there's many more to come, you can join us over at the Patreon. The link will be down below in the description, and you will know live updates on what I'm watching and what attracted me to it. So the tweet of the day is institutional investors buy a stock. It makes a bold statement about the stock and the institution's outlook on the stock. This is why I like to know what institutional investors are buying or looking at, because it just makes a bold statement of the company, and it makes a bold statement on what they see moving forward. Who is your favorite institutional investor to watch? That's my question to everyone, and I'm thankful for the one person that commented, and they stated it was ARK. Who is your favorite? Comment down below in the comment section who is your favorite, and if you don't have a favorite, you need to find one. And if your favorite is ARK, I really want to encourage every single investor and viewer to find another one. Not just ARK. ARK is great, ARK is growing, but ARK is really small compared to some of the largest institutional investors out there that have a track record for the last 20, 30, 40, 50, even century of years. like it reaches up to a century. They've been around for so long, in the last decades and even up to the last century. So definitely do some research on that. But if you do have one other than ARK Invest, I would love to see you talk about it or comment down below who they are. So let's talk about the Treasury yield. So the Treasury yield, as I've been looking at it, and I did the beginning of this video, it was sitting at around 1.46, almost 1.45 as I was looking at it today, and 1.46 in the last several minutes. I mean, this was literally 20 minutes ago before I started doing the video. I was looking at it and it's already jumped up to 1.48. When we zoom out to the 1 month, it's gone up from 1.13 all the way up to 1.48. And when you do the 3 month, it was below 1.0 and we're almost double, right? Almost, not there yet. And the 6 month, you go back down to 0.6, and then year to date, and then the 1 year, the lowest that we've seen at 0.5 in the history of the 10-year Treasury. And when you go all the way to all, the highest was up here at 15%, and all it's been doing is going down. This has been the turnaround, and it's making a lot of investors uncomfortable. As long as this doesn't pass 3%, I believe, in my opinion, based off the history of this, it could go back to a healthy consolidation. And if it stays there or pulls back downwards, it could be even a healthier sign for a bullish market. But there's going to be a lot of rockiness and a lot of uncertainty as this continues to go up if it gets closer to 3% or 2%. Now, this is creating the wildness and the uncertainty in the market overall. And that is why we're pulling downwards. We need to see what's going on. I have the RSI pulled up here on the 30-minute, and this is an oversold area. This could bounce back up, and we could see something like this happen, bring itself back up, kind of level off, and then Friday bring itself back up a little bit, and then all of a sudden we pull back down in the near future going into next week or the next several weeks, especially if this continues to go upwards. This is something to watch carefully. It's the 10-year Treasury, right? That's what you want to go ahead and search, and it's at 1.4. It's supposed to show a percentage. As long as this stays below 1.5, 1.6, I shouldn't see the S&P 500 falling drastically. But if this continues to go upwards in such a quick spike like we're seeing it, it's going to create some uncertainty and rockiness in the market. So I do want every single investor and viewer to be aware of this. We need to watch this, and hopefully, again, we are in a correction and not a crash, because the Treasury yields have hit the all-time lows. It's bouncing back, and what if all it does now is go back up to newer highs for the next 5 to 10, 20 years? You know what that can signify for the market? A long-term crash that a lot of investors, experts, billionaires, millionaires are talking about, and Bitcoin is hitting all-time highs. That right there has put a big question mark, in my opinion, on what's going on. I just want to be aware, and it's very important to not be caught by surprise, but I want this to be more of a correction than a crash, and that we can continue to grow exponentially and see a bullish market continue with corrections that are healthy. No crash and no long-term crash, because what would happen is what a lot of experts say, and this is just a quick drawing, don't use the numbers on the side. Imagine that this was the peak up here and we fall all the way down, and then the market's just going to sit like this, sideways. We hit a big crash and it's just an L-shape recovery, and then it's going to take some time before, years before that starts going back up slowly. And that would be one of the longest crashes that we've ever been in the history of crashes. I hope I'm wrong. I hope that I'm just thinking this, and that all of those experts and billionaires are incorrect, and that we can go ahead and hopefully have this priced in somehow into the market, and that worst case scenario, this goes up to 2-3%. the market gets adjusted to it, we get used to it, and we continue, because we were growing even when it was at 2, even 3%. We were a growing economy, and the S&P 500 index was growing. So hopefully we can handle this and not get too crazy. But the one thing I'm watching right now more than ever is institutional investors. While all retail investors are scrambling around, they are focused and they're executing orders, and large ones, on specific stocks. As always, guys, thank you guys so much for watching, and let's make some money.